said my association people have reduced. Rice can reduce. What about if oil doesn't reduce? What about if pepper does not reduce, salt does not reduce? You can only have rice, and you cannot eat only that plain rice.
Fair point.
That is my concern. I'm very passionate about this topic, and I think that the government needs to take it up. Okay. It has to be taken very seriously as they are taking. Yeah.
All right, fair point. You made an earlier comment about the fact that it will take a while for you to make up for the windfalls that to benefit from the windfalls that you've gotten with the CD appreciation. I will speak to Dr. Boakye on it if he agrees with you. But before that, we'll play an interview we had earlier with the president of the Association of Ghana Union of Traders Associations, GUTA, calling on their members to reduce prices because of the appreciation of the CD against the US dollar. We'll watch that and then come back in studio.
Okay. Well, we are nothing. So if the consumer is unable to buy for us because as a result of high prices and the exchange rate has come down, you are not going to make anything whilst the price still remains where it is. You are unable to turn over to go and pay your banks and all that. So it is in their very interest that we transfer the gains to the consumer so that our turnover will be enhanced. So it's a win-win situation that we do not joke about it, though people might have challenges. And it is true that people might have bought the forest at the old rate, and that maybe they have not made do of the goods. And so what should those people do and all that? That's why we are advising that you do not overprice yourself out of a competitive market, because once people have gotten it at a cheaper rate, they are not going to wait for you. And if your goods are perishable, are you going to sit down for them to perish or some sort? So we are appealing that they strike reasonable averages between the old and the new, so that they can still remain in competition. So it's a very good appeal that we are doing without any malice or imposition that we are doing. Because we are not in a price control regime, and that nobody, not even the government, can tell somebody to reduce its prices. Even the socialist countries and all that are all liberalized now, doing liberalized trade and all that. So it is not in anybody's right to impose any price on somebody, but we can always also appeal and educate to our members. And this is exactly what we are doing. It's in our own interest if the prices respond, because we have to also generate good faith for the consuming public, who normally also fight for us when taxes are going up, exchange rate is going up, because for their own interest, that's why they also fight for us, so that when there's stability, they can also have stability in prices and all that.
So that was the president of the Ghana Union of Traders Associations, GUTA, Dr. Joseph Obeng, basically making the argument that and urging his members to lower their prices because it's important that they do to stay competitive. Because if you claim you have old stock and you wouldn't sell with the current rate and people are selling at that rate, you risk losing out. But there's also the issue of that wasn't the rate at which I bought it, so why sell it for less? And that's why we have financial economist Dr. Boakye Adom in studio with us. Doc, thank you so much for joining us again. So this argument about whether or not to sell at the rate at which you bought it, which is really the way to go?
Well, thank you, Michael. Like he rightly mentioned, in a free market economy, you don't force people to reduce their prices, and you cannot do that. What it means is that the price of a commodity will tell us almost everything we have to know about that product. And assuming that all market players have adequate information, we are saying that if the seller believes that the price is going to drop or is on a downward trend, then per that estimation, he or she is likely to reduce the price. Well, the reaction from the market shows that, number one, sellers don't believe in the drop in the exchange rate. And number two, probably it could be artificial. and that they have a wait-and-see attitude, that the dollar started, or the cedi started gaining strength from, let's say, March coming. Let's give ourselves a bit of time. If we rush to reduce the price and the hikes set in, we are now coming to increase price again. So the price that we are seeing shows whether they believe in the drop or the sustainability in the drop in the dollar rate or the appreciation in the cedi. But Michael, we are coming from a background of the government injecting close to $1 billion into the economy in the last 3 months. If we look at the calendar, in February, we injected around $120 million for BDC in their oil purchases. Then when you come to March, around $264 billion. Then last month, around $460 million, sorry. So in total, we have done around $874 million. If we want to keep the cedi appreciating or being stable, then we must continue injecting that amount of dollars into that system, into the economy. Per the calendar, we are expecting another injection by the tail end of this month and probably early next month, about $120 million. That will bring it to about $1 billion for just about 5 to 6 months of the year. Are we going to be able to sustain that? If we are unable to sustain that, then the depreciation is likely to set in. So I can understand why sellers they may not have this information. The ordinary market woman may not have this information. But looking at the cedi performance over the year, previous administrations for the last 4 years, and it's now beginning to pick up, there is a need for us to be a bit cautious. Somebody will say cautiously optimistic. And don't be in a hurry to reduce the price. So we can appeal to them, we can encourage them, we can say all the things that we are trying to say, but the price actually tells us that sellers do not entirely believe that the drop will be sustainable. So the government and the regulators should show more confidence or bring information to assure them that this sustainability is certain. You see, and we are also changing or shifting our exposure to the gold, because we are doing so well. We are getting all these inflows because our gold activities. We may be doing well against the dollar, but we have shifted our exposure. So what it means is that when the gold price on the world market also start falling, then the volatility of our country or our ability to get that level of dollars will also be reducing. So there's a misfeeling that the government should be able to manage, number one, how much dollars we keep pushing into the system. I think it should rather be slow and it shouldn't be artificial. When the dip is so steep, then there's a concern, there's a likelihood to say that it is artificial and it's likely not to be sustainable. Because every 3 months, if we have to generate around $870 million to inject it, then we are talking about, to go through the year, we will need close to about $3 billion, injection into the system. And that will increase our exposure going forward.
You speak about whether the forcing of the dollar, the cedi to appreciate against the dollar, being artificial. We do know that speculation is also part of the reason why we've been experiencing this sharp depreciation. By injecting the dollars, they are tackling that angle of speculation. So where from the artificial side of it, if really they are meeting the demand of, for instance, the BDCs, and they are no longer on the market looking for dollars?
So the artificial nature is, I'm saying from the point of sellers, that the possibility of they assuming that it is not sustainable. Good. I understand that speculation could influence this exchange rate volatilities. And in the last few weeks, there has been a lot of adverts and a lot of bloggers saying, go and sell your dollar, go and sell your dollar, the dollar is going down. That is a very good PR, and I recommend whoever is doing that to keep doing it. And I think the good time people came to tell us that dollar being a store of value now is going down. All this PR works and also help the speculation. However, the reality is that, you see, we started all this forward trading some time ago to let investors or traders know that there's enough dollars waiting for them, so they shouldn't be in a hurry. But when the reality sets in that the time that they need the dollar, they cannot get it, then speculation, whether we have to speculate or not, the reality has set in. So I am coming from the background that if the prices are not going down as we expect it to be, then it could be that the sellers think that this could be artificial, and there's a need for us to look at it. And number two, selling forward also, like you mentioned, make people do not rush in buying it, and it has effect of bringing down the rate. However, if we do not get this amount, about 800 million every quarter, for the next 3 quarters ahead of us, if we are unable to generate it from the international market, especially in our gold activities, if the price of gold also start falling, then it means that we are going to lose out, and we will not be able to pump that amount of dollars that we need into the system. Then the reality will set in.
But these are assumptions, because if you look at the gold, the trend for gold over the years, it hasn't depreciated sharply ever. So
but
the movement,
you just showed that today there's lost about almost about $972.
The movements on the gold market have been relatively marginal.
Yes, I understand.
And that's my point. And the fact that looking at what we are doing locally, we should expect our gold volumes to go up, especially from the small-scale industry. Number two is the fact that we are expecting IMF injections probably next month or by the end of this month. Thirdly also is that this China-US conversation is not going away anytime soon. So we should also think that it will be safe to assume that the dollar will not begin to pick up anytime soon. Aren't all these dynamics enough to say that we should expect, at least for a greater part of this year, the cedi to continue to do well against the dollar?
For where I sit, I'm expecting a little bit of stability, but I'm explaining from what is the reality on the market. If I have confidence that the dollar is going to go down, and even if I bought the thing less at a higher price, and now the rate is better, what I'm going to buy, I will be buying at a lower rate. The price is relatively going to go down. My next purchase is going to go down. So I have no reason not to reduce the price. But here comes a case. You go to the market, prices are not reduced. Even if it is reduced at the wholesale, when you go to the retail, where most of us do our businesses, prices are relatively the same. So yes, the indicators are pointing to the right direction, that there's likely to be stability. But that is not what is reflecting on the market. And you see, and you mentioned about the U.S. trade not going away any soon. You see, we cannot predict it. In the same way we didn't predict that they will suffer within these 3 months. They will find a way to come back. And when they find a way to come back, then we are going to also be on the wrong side. So we should not, as for externalities, we should be able to put our house in order, no matter what happened in the U.S. Or other countries. If you put your house in order by making sure that you build a good fundamentals, you will be able to stand the test of time. And in any case, in our gold activity, as we tend to sell more, we are not building our reserves. You see, if we look at the gold reserve over the period, in May 2023, gold reserve of around 8.7 tons. As of January, we were around 30 tons. In the past 4 months, it's about 0.8 tons that have been added to it. So we are not building the reserve. We are interested in selling to get the dollar and inject it. So we should be having the mindset that if we have built a thing over 280% within a space of about 15 months, and we've only added about 0.8 tons in 4 months, then we are not doing so well in terms of building our gold reserves. And we may be only pushing it into we may be selling and pushing the money into the economy.
Fair point. So we'll go on a quick break. When we come back, we'll look at, for instance, the fuel industry. Over the last 5 consecutive windows, we've had drops in prices. What would it take for this kind of price drops to reflect on our traditional market? What would it take? So we'll delve into that. We also have joining us the president of the Federation of Association of Ghanaian Exporters, FAGE, David Kobo, also to give us their side of this conversation, because while the cedi continues to appreciate against the dollar, it also means that the revenues that they as exporters get from their trade is going to decline significantly. Stay with us. We'll bring you more. Welcome back. This is Business Focus here on TV3 with me, Michael Obudu. Remember that Business Focus is sponsored by Telecel and EcoBank. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know the emergency numbers. Well, here's one you'd want to remember, in a *770 hash. Yes, *770 hash is the new EcoBank money emergency number. *770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank. Well, we've been joined in studio now by David Kobo. He is the president of FAGE, that's the Federation of Association of Ghanaian Exporters. Thank you so much for joining us. I'm sure you've been following the conversation so far. Importers are happy about the appreciation of the cedi against the US dollar. You, on the other hand, may not be too pleased with this. Is that the case?
Yeah, so let me say good evening to your cherished viewers. I think for me, too much stress on the cedi hurts our exports. And that's the more reason why there should be some the allowance for depreciation. But that should have been done overnight. And that is one thing that we also need to know. And also, there's a difference between stability and appreciation. Let's get it straightforward. And what we are seeing now is this stability or appreciation. That was the more reason why I was listening and nodding to what my colleague here said. Because the issue here is we are still exporting. But then when we get our inflows counts not expecting that. Look, when we were exporting, we were targeting a return of maybe 16 cedis, and now it's 13 cedis. And this is where policy comes in, because people, the good years ago, are they reducing their terms per the current dollar depreciation, cedi depreciation against the dollar? These are all the things we need to look at. But the question here is, short to medium and long term, are we happy that our cedi should be depreciating or appreciating? And the answer here is all of us will allow that our cedi appreciates against the dollar. So in the medium term, yes, we are going to suffer. And that was the more reason why I call for policy. The policy should drive most of this, because for economy, you can't say what you want. It's the actual that's really happening. So what I would rather say is, yes, our exporters are crying because, again, like I said, you currently, as it stands, if you are paying somebody 30 cedis, the same 30 cedis you are going to pay the person when the person works at the park house in the house. The issue here is in conformity with what the inflows you are receiving. The answer here is no. So you are definitely going to make some losses. And I call for policy. So this is the time for the banks to be up and doing, where they look at how best they can cushion our exporters. And remember that I've been saying that even though we have the Exim bonds, we have the DBGs, we have the GESELs, the insurance, I think that there should be a special purpose vehicle for export and the agribusiness in general. When that's happened, these shocks will be absorbed. Do you understand me? But if we don't get that, it always becomes a problem where people go to the bank to borrow. They borrow at that rate. Now, going to pay back, you still have to get the same dollars to go and pay. So it means that you are still doing things that doesn't really conform to what the business norms are. So we should look at policy to drive it. And I will still insist, policy drives most of this and we'll be good to go. But as it stands now, if we leave this as it is, it becomes an issue. And it's important that the cedi shouldn't appreciate overnight. And that was the more reason why I said that in economics, there's depreciation, percentage of depreciation is always allowed. It depends on how we do it.
So you've spoken about basically government introducing policy. Specifically, what policies would work for you as importers right now to absorb the shocks of this?
As exporters,
yeah.
Like I said, clearly, when we change our dollars, we still have to purchase certain things. We still have to do a local marketing. But the issue is now, if you go back to the market, I hear people are still selling the things the way they got it, because their argument is Yes, I mean, over 3 weeks ago, they were buying the dollar. They bought the dollar at 16, 17 cedis. So currently, they are not going to reduce it because they think they want to sell to appreciate whatever shortfalls be. So this is where I think the government should have a clear policy on this depreciation and appreciation things. You understand me? So is government going to find means of cushioning the force of the exporters as against what the currency is now? These are some of the things we need to look at. If you look at tariffs now, tariffs are not so, we don't have reduction in tariffs, even though the cedi is appreciation. What are we going to do as a country to be able to appreciate that? Because when we talk about exporters, we go through all these things. You go to the ports, you still pay the same rate you are going to pay, so it's still the same dollar you are using to do this. If they're even going to take in cedis, you are going to change the dollar. I don't want to say the dollar you are hoarding, because the issue here is none of exporters are hoarding, because the dollar counts, you change and still use it to export. Your raw materials are being, you buy your cattle in Ghana. Aside those who import their raw materials, it becomes a big problem for us. So these are some of the things that I'm looking at. There should be a policy dynamics for most of these things. Once we get it, then we are good to go. But other than that, it will always be difficult, because who knows, like my brother said, tomorrow we don't know what is going to come. If they're able to inject 800 million at a go, then it means that the dollar can go for as low as maybe 10 cedis. But it shouldn't be overnight. You understand me? They should be calculated then to be able to do that. Once that is done, then we'll seriously appreciate it. But like I said, to short, to medium and long term, are we happy that the dollar has been rising? The answer here is no, because when the dollar was 8, we were still doing our business without any problem. When it started rising, we started complaining. So when it's coming down, if they will complain, we should see a way around it to make sure that people don't lose their monies.
Interesting.
And rather bounce back with confidence in government and the currency.
All right. So on the issue also of government policy to check all of this, do you get the sense that this government, for instance, is committed to this? Because just last week we had a committee has been put together to spearhead the establishment of a national carrier, something that you, Phage, have constantly called for, because you believe it will help bring some stability for your exports. So do you get that sense?
Yes, I get that sense, because if you look at just last week, Monday, a week today, government inaugurated the 24-hour economy. So assuming the 24-hour economy is doing right and injecting a lot of dollars into the system, definitely the dollar will still fall against the cedi. Now, establishing a national airline means that there will be a policy around it where maybe benchmarking other countries, saying, look, our export rates should be maybe $80 a kilo as against what we are paying currently, because it's a national asset, so they are going to waive a lot of taxes and other things. It gives us some sort of hope for us to be able to export more. But production, are we able to look at that part as well? And that was the more reason why I keep talking about the special purpose vehicle, because the more we export, the more money that we reckon. You understand? So the more dollar that foreign exchange that comes to the country, so make sure that we'll enhance the cedi to appreciate against the major currencies. So, but then you can't just export overnight. There is one ecosystem, that is the production ecosystem, that needs clearly to be worked on. And that is the more reason why I'm still talking about government policy direction to the financial institutions and the exports, how do you call it, the airline you were talking about. So we still have a sense of hope that, look, something should happen. And that's the more reason why I'm here.
Okay, Doc, I'll come to you. Now must be a really tough time to be leading a government like ours, because a country like ours, on one hand, you are trying to stabilize the economy, and yet you are doing so at the risk of losing revenue, because if this trend continues, it means that our revenues, for instance, from our crude oil exports should be expected to decline. How then do you strike a balance and make it a win-win situation? What do you say?
Good. You see, last year we had trade surplus. One may also add that it's because the exchange rate, the cedi did not quite good. Yeah, so when we lose in one side, we tend to gain on the other side. So for us to have a win-win situation, what it means is our oil export. Is there where we can resource the toll and the local refineries? So we refine them here. In that case, you have been able to stop the likely decline in the value of your oil revenue. You know, toll seems to be working at one point, then following day it doesn't work and all that. Can we have a policy agenda? You know, are there people who are benefiting from the inefficiencies in toll? And that is why we can't have a toll running on its feet. So let's settle that. And yes, there are other small, like Central Refinery and other private refinery that are coming up. Is there where we can resource them so that those oil will be refined here and the BDCs can easily buy from them? You know, so if we don't have a comprehensive approach and we only celebrate the fact that the city is gaining, you know, we will tend to also suffer in our trade, our import-export activities, you know. And now, you see, you were asking what a specific policy for the export industry. What I would say is that they can even go in for a certain benchmark rate if the government wants to support a particular product, let's say cashew. We will give you a benchmark rate of this. ACCA do something like that. You see, when the pound rate is so high against the cedi, they give student rates. So students do not exchange or pay fees at the open market rate. In the same way, if there's a particular product we want to protect, we can say that, okay, no matter the rate, the same way we fix cocoa prices so that the volatility in cocoa price, the world market doesn't affect farmers. We can do same for products, the export industry as well.
Interesting. Now, in the midst of all of this, S&P Global Ratings has raised Ghana's foreign currency issuer credit rating to CCC+ from SD selective default, citing the nation's significant strides in debt restructuring and an improved macroeconomic outlook. The upgrade announced on May 9, 2025 follows the successful completion of key phases of Ghana's domestic debt exchange program and ongoing negotiations with external creditors. Now, the rating agency affirmed its CCC+ issue ratings on Ghana's debt and its CCC+ long and short term local currency ratings with a stable outlook for both Ghana's transferability and convertibility assessment remains at CCC+. Okay, also finance expert Joe Jackson has been commenting on this latest update. This is what he had to say quickly.
The rating agencies have recognized that there seems to be something good happening here. We've renegotiated our debts. We are making attempts to pay. The debt is costing us less because the cedi is appreciating. So they have upgraded our status. We were toxic, the lowest of the low, because we defaulted.
So that was financial economist Joe Jackson there commenting on Ghana's recent upgrade in ratings by S&P Global to CCC+ from SD. On this note, that'll be all for today's edition of Business Focus here on TV3. A special thank you to my guests in studio. We had Dr. Eric Boakye Yadom. He is a financial economist with the University of Professional Studies, Accra. We also had David Kobo. He is the president of the Federation of Association of Ghanaian Exporters. And earlier joining us via Zoom was John Awuni. He's the chairman of the Food and Beverages Association of Ghana. Thank you so much for watching. We'll catch you same time next week. As always, please stay safe. My name is Michael Obudu. Good evening.
Business Focus is brought to you by EcoBank, Telecel,
Over the last 23 years, Ashesi has become quite